ANZ, shaping a world where people and communities thrive and win as one. Australia and New Zealand Bank has been supporting Papua New Guinea's economic development since 1910. Through 2 world wars, our PNG independence, numerous natural disasters and the COVID pandemic, making ANZ a part of the fabric of this nation. Papua New Guinea is a country rich with natural resources, biodiversity, beautiful islands, beaches, and rugged terrain. A country with pride, a country with steep traditions, ambition, and a bright future. ANZ is an international bank with a presence in 28 markets, including Australia, New Zealand, Pacific, Asia, UK, Europe, and America. Our global network supports businesses to move goods and capital and grow sustainably. Since 1910, ANZ has been proud to play our part in this nation's growth and development. We continue our commitment to connecting institutional and large corporate customers with trade and capital flows between PNG, Australia, New Zealand, and the Asia-Pacific region. We have worked with PNG for more than a century already, and we continue our journey together into the future. ANZ has a particular focus on the resources, energy, infrastructure, food, beverage, agriculture, and diversified industries in PNG. We have evolved to a focused institutional bank with a growing emphasis on sustainability. ANZ offers a full range of services for institutional and large corporate clients, including cash payments and trade facilities, foreign exchange markets, loans and specialized finance, dedicated corporate centers to support our existing clients' day-to-day banking requirements across PNG. We are committed to giving back to the PNG community. ANZ PNG is increasing the financial inclusion and capability of Papua New Guineans through our flagship financial literacy program called Money Minded. ANZ is the #1 institutional bank in the region. We're connecting PNG and your business to the world, and we are connecting the world to PNG. ANZ, shaping a world where people and communities thrive and win as one.
ANZ in Papua New Guinea since 1910. Folks, don't you think that deserves a round of applause, please? Good afternoon, everyone. My name is Kishti Sen. I'm an economist with the ANZ research team based here in Sydney, and we write reports on Papua New Guinea. I give an independent voice to the economic conversation that the country has on a daily basis, and add our thoughts to where the Papua New Guinea is at, where is it going, what are the risks involved, and the whole purpose of our research and writing is to provide our clients with the most information possible so they can make the best commercial decisions. That is the aim of our research. Now, before I get into our PNG story, let me start by telling a little story that I had in 2019. Now, Peter Taylor, some of you in the room may be familiar with him, a former president of the Australia Papua New Guinea Business Council. So Peter Taylor was in a room in Brisbane in 2019 addressing a breakfast audience. And this is what Peter said. Peter said, "Papua New Guinea, your time will come." And as I stand here today, folks, and I say it with a lot of pride, being a Melanesian brother myself, been born and brought up in Fiji, not quite a one talk, but hopefully by the end of today's presentation, I will be a one talk as well. And I say, Papua New Guinea, your time has arrived. We in the ANZ Research Group firmly believe that Papua New Guinea is on the verge of something special. The country has got a once-in-a-generation opportunity to achieve strong, sustainable economic growth for not the next 2 to 3 years, but for the next decade. And I'm here to share that story with you today. Now, to put the next decade in perspective, it's not all going to be driven by projects. Yes, projects are a big part of it, and we've heard this morning in terms of the importance the projects, in particular the resource industry, plays for Papua New Guinea. But we believe the long, strong, sustainable growth will come in 3 stages. It will initially be driven by construction, not only in just the gas or the mining projects, but in the other construction sectors as well in terms of civil engineering, buildings. The second stage will come when the projects reach into production phase. So we're talking here about production coming on stream. And the third phase will be when the private sector finishes all the construction work, the government coming in and filling some of the gap that's left behind. And the reason we feel confident about it is because of what the Treasurer talked about this afternoon in terms of budget repair. Certainly the intent is there from the government to repair the budget. Essentially means bring the budget back to a surplus position or a smallest possible deficit. But the government is intent on getting to a surplus by 2027, which is good. We welcome it. And then eventually retire all debt by 2034. Now, when that happens, notwithstanding that the government will exercise their back-end rights to some of these projects, that will perhaps put some sort of a strain on the cash flow. But despite all of that, the government will be in a very good position to invest in infrastructure, the core government services that the Papua New Guineans deserve, and unlock the potential it has in lots of other industry sectors, the non-resource economy. You put those 3 stages together, you have a period of 10 to 12 years of very strong, solid growth. Now, just to put that in perspective, though, we've got to look at the last 10 years first. Now, a lot of people will look at the Papua New Guinea national accounts and look at the headline GDP number and say, economy is doing quite well, not bad. 5.2% GDP growth for 2022. The government must be doing something right. 3.4% of that 5.2% came from the non-resource economy, which is where the government's focus is. That's also good. But really, for the here and now, Papua New Guinea's strength is in its resource industry. And unless and until you make significant investments in this sector, Papua New Guinea has been lucky, given that discoveries have been quite significant. It's bringing those discoveries to the market. That's where Papua New Guinea has lagged over the last 10 years. Surely, there are negotiations happening, and as I say in the banner, project negotiations can sometimes take time. In 2019, the gas agreement for Papua LNG was signed, but then the new government came in, which is well within their right, to review the gas agreement, and that took a while. So while those negotiations were happening, there was not a lot of investment, business investment, in any of the resource discoveries. And that basically meant that Papua New Guinea had a situation of very soft, weak growth. Now, if you take an average growth for the last 10 years, it comes to about 3.8% per annum. But the last 10 years does take into account 2014 and 2015 when PNG LNG gas came on stream. That put GDP up by 10 to 15%. Take those 2 years out, over the last 8 years, PNG's economy really only grew by 2.6%. Which is not good enough if you've got a population growing by higher than 2.6%. As one of the very prominent business persons in Papua New Guinea put to me a couple of weeks ago when I was in Port Moresby, he said Papua New Guinea's biggest risk is when economy doesn't grow above population growth. If the economy is not creating jobs to absorb new people coming into the labor market, then you have a problem. And I'm afraid, underneath those some impressive headline numbers from year to year, Papua New Guinea's economy has been quite soft over the last 8 years. But that's all about to change in a big way. And this graph perfectly illustrates why Papua New Guinea's economy has been weak. I say, for here and now, it's the resource industry that will drive PNG's growth and open up opportunities in the non-resource economy. And you can see it very clearly. Once PNG LNG construction was complete in 2014, there wasn't any other major project even half of the size of PNG. We all know PNG LNG was a big project, $19 billion US, to fill that gap. And as a result, we have had the 10-year period without any major project, and economy, as I said, grew by only 2.6% per annum, not good enough. But coming up, because of project negotiations and delays in project commencements, PNG now can look forward to a cluster of projects happening at once. So the weakness over the last 10 years, or 8 years in particular, has given strength to the next upswing that Papua New Guinea will experience. We all know about the gas projects. We heard from Thomas this morning. He said, first gas in 2028. And it takes 4 years. That project has a 4-year construction phase, so you can be fairly confident that that project will commence in 2024. Second half of 2024, most likely, FID first half of 2024. So that project looks like it's keeping to its milestone for a commencement sometime in 2024. And we've already heard this morning that Porgera Gold Mine will start on the 22nd of December. And that's a vote of confidence in the government, that it can do deals with the private sector. So with Porgera restarting, Papua LNG probably commencing in the second half of next year, and Wafi Golpu soon after, we're looking at 3 quite big projects happening at once. And you put on top of that some of the infrastructure development that is happening up and down the country. We know all about the Connect PNG program, the National Electrification Rollout Program that's happening. This will be the cherry on top of the resource investment boom that we see for Papua New Guinea going forward. Now, that will be the construction phase. Now, once construction is over, you don't get GDP growth falling off a cliff, do you? What happens is, yes, construction activity comes off, but then the gas exports pretty much offsets the decline in construction activity and keeps the GDP at higher level. Australia went through the similar situation when it had its construction period finish. Gas, because the investment was so huge in the Northwest Shelf, the Gorgons, the Wheatstones, and the Gladstone LNG, the Northern Territory, ICTIS, the production or the gas exports from the just offset the declining construction activity, and as a result, Australia did not experience a recession. Same thing will happen for Papua New Guinea. When Papua LNG construction finishes, the gas exports from that particular project will offset the decline in construction activity and keep GDP up there. But the good news for Papua New Guinea is that then PNG gas starts construction. So construction doesn't really fall off anywhere. So you've got construction staying at the high level for another 4 years, but gas exports on top of it. So Papua New Guinea, if you look at the chart there, was the 11th largest exporter of gas in 2022. And look where Australia is, second largest. Why? Because they invested in capacity. And I've just mentioned some of the projects we're talking about. The Northwest South gas projects in WA, Queensland LNG, Gladstone LNG, Northern Territory, amongst others. So my question is, I think PNG can also invest in its capacity and enjoy some of the benefits of gas exports. So once these projects come on and they start, Papua LNG, we believe, will double PNG's gas exports from 8 million tons to 15 million tons. It'll move up the rankings. And that'll be the second stage of boost to GDP growth. And the third stage will come from the government investing in infrastructure and core government services. Now, we all know that Papua New Guinea has got great potential in agriculture, but its share of exports in the global market has been declining for a number of years. And it's not just roads and electricity and the utilities will fix the agriculture declines in agriculture volumes. There's a lot of work that can go in now to help the farmers, the smallholders, the plantation owners, extract more yields from their crops. So a bit of technology, training, planting materials, those things can help now. But eventually, it will have to be infrastructure, your roads, to bring products in the remote areas to market. So for them, farmers to access the market, it'll be roads, and the governments won't have to provide freight subsidies anymore for those projects. But the governments have to be in a better position financially to be able to fund these projects. And we think by the early 2030s, the government will be in a position to do that, because certainly the intent is there for budget repair, and I think the government will get there. And then it can roll out some of the infrastructure and keep activity high and open up opportunities in its non-resource economy. So where are the opportunities? Look, everyone talks about manufacturing, especially because you've got the gas that you need as a fuel for manufacturing plants. Now, the population of Papua New Guinea, does anyone want to have a guess in terms of population of Papua New Guinea? So I don't get in trouble. Is it 9 million, approaching 9 million, nearing 10 million? Let's just say approaching, nearing 10 million. That's a lot of mouths to feed. So if you're in the manufacturing business, there's opportunities there. And once these people, Papua New Guineans, get engaged into the next upturn through employment, there will be an income stream to draw on, and their spending power will increase. So there is definitely potential in manufacturing. And downstream processing, as the Prime Minister always likes to call it, which is basically means adding value to your raw commodities. So you're exporting something close to a finished product than a raw commodity. Now, I talked to some of the coffee growers in Goroka, and they told me, like, look, we're exporting every bag of green beans that come into our warehouse, and if we get access to more, we'll pretty much export all of it. Then I said, why can't you ground your beans here or roast your beans here and then sell something close to a finished product? I said, look, roasting really happens where the coffee gets eventually consumed. So it'll be difficult to do it. But that doesn't mean there can be opportunities tried in cocoa and some of the other agriculture commodities, including fishing and forestry. More downstream processing there. But that's not all. There's renewable energy potential as well. And as I said, as more Papua New Guineans get into jobs, there'll be opportunities for the business services sector, the health and education to do better as well. But that is down the track. Now, I do want to say something about the foreign currency shortage, rationing in Papua New Guinea before I wrap up. So for a number of years now, it's been hard to get timely access to foreign currency. And pretty much every commentator that's out there has got an opinion in terms of what is the solution to the problem and how can PNG get out of it. We all want PNG to get out of it and for this to end, the rationing of foreign currency to end. I've had a chat with my friend here, David Tau, this morning, and I accept that the Bank of Papua New Guinea is trying to do all it can to alleviate this problem as soon as possible, and we've had the Treasurer say something on that as well. So it looks like there will be more liquidity into the market early next year, which is a good thing. We welcome it. So for now, while we wait for the foreign dollars associated with the foreign direct investment to come into the country, I'm afraid we will have to just rely on the liquidity that's provided by the Bank of Papua New Guinea to get by. They have got constraints to work with, but they're doing their best to try and find a solution to the problem, so we welcome it. I don't personally believe that currency depreciation is a solution to the problem. And as I discussed at the budget breakfast in Port Moresby a couple of weeks ago, as an economist, I do understand that the currency does play an important role in allocating resources from trade-exposed industries to the stronger sectors of the economy. And you only got to look at a country like Australia. So when Australia was going through this mining investment boom in late 2000s, early 2010s, the dollar was at parity with the US dollar. What did they do? That it made the trade-exposed industries of Australia very uncompetitive. So it's very difficult for tourists to come and holiday here because the currency was too strong. Manufacturers packed up and left because they couldn't export with the dollar at parity. And students stopped coming here because it's too expensive. But what it did, by making these industries competitive, it shifted resources from those to the mining industry to service the demand or the growth in demand in those industry sectors. So the currency played a role in shifting resources. That's what you call a structural change. And when mining investment boom was over, commodity prices fell off, foreign direct investment dollars dried up, dollar came straight back down to 70 cents US. And what did that do? It made your trade exposed industries, your manufacturers, your education service providers, your tourism industry more competitive again. So that's the role of the currency. In Papua New Guinea, the currency is already 35% lower than at its peak during the PNG LNG construction phase. So if the currency could play a role in keeping the FX market balanced and allocating resources to the trade exposed industries, you think Papua New Guinea would not have a problem today. If 35% depreciation in the currency is not solved it, I don't think another 7 or 15% will do, simply because Papua New Guinea doesn't have the volumes in its trade exposed industries to take advantage of a lower currency. So how is a lower currency supposed to help Papua New Guinea? It's supposed to help the mining industry get more output because it's relatively cheaper to buy from Papua New Guinea. I don't need as many kina. Agricultural output should increase. And what else is Papua New Guinea? They don't have that many other industries that's sensitive to the currency. But Papua New Guinea is already exporting almost everything it can produce in the agricultural sector right now. Ditto for gas exports. But at the same time, so depreciation of the currency is not going to bring dollars into the country, more dollars into the country, but it's hurting the consumers through a rise in import prices. More liquidity from the central bank, I think, it is a good solution to the near-term problem on the FX market. And I think come end of next year, we won't be talking about foreign currency rationing in Papua New Guinea, because I believe with Porgera restarting and some of the Papua LNG probably kicking off, those two together plus some of the other capital expansion plans that are happening at the mines, we'll probably see the FX market back to a balanced state by the end of next year. And Papua New Guinea will be very well on its way to having a free-floating exchange rate regime after that, where the market just dictates, depending on demand and supply, where the exchange rate should sit. Now, just to bring it all together, so Papua New Guinea economy is, in US dollar terms, is about a $20 billion economy right now, adjusted for price, so inflation-adjusted terms. In real terms, constant price is 20 billion. It'll grow to about 40 billion by the end of the decade. We're fairly confident about it. And what that basically means is we're looking at a growth rate, average growth rate of about 9.8% over the next 10 years. And that's something to really look forward to. I think PNG has done really tough for the last 10 years. It's been hard yakka, a lot of project negotiations. But I think PNG is now on the threshold of achieving that high growth rates that a lot of people saw coming a few years ago. So on that note, I'm going to stop there and finish it. Thank you.